So I was talking to one of my previous buyers, and he said, Ethan, you should do some reporting on the school system. Now, I really have kind of avoided it, but today I took all the high schools and found the median price by year in each high school in Middle Tennessee. I'm going to share that data with you, and then we're going to look at the most expensive district and maybe some of the listings in there. I actually found the cheapest house in the most expensive district. I mean, how much do you think the cheapest house in the most expensive district is? You're about to find out. Prices in Nashville went negative year over year in September. I can't believe I'm saying that. You know, I said I didn't think that would happen. Of course it did. So we're going to look at that. But first, ladies and gentlemen, my favorite, I don't know what you call him, my favorite economist, Larry Summers, says the 50 basis point rate cut in September was a mistake. You know, I personally thought that we were like in full-on recession, but then you have this data that says we're not. It's very confusing, to be honest with you. If we're in a recession, maybe mortgage rates go down. If we are not in a recession and they've loosened monetary policy, then mortgage rates could very well head up, which is interesting because I had a lot of buyers saying, oh, I'm going to wait for the Fed to cut rates before I think about refinancing or before I think about buying. Let's look at Mortgage News Daily. This is Mortgage News Daily. Let's just look at their mortgage rates. Mortgage rates have been a downtrend since April. And then what happened? Guess what day that mortgage rates bottomed on? September 18th. Well, 17th. These are the Fed meeting days. Okay? September 18th is when the Fed announced that they cut by 50 basis points. Mortgage rates have only been going up since they announced the cut of the Fed funds rate. Isn't that interesting? So just so you know, the Fed has no control over where mortgage rates go unless they outright start buying bonds again. They really don't have control over where mortgage rates go. And you can see mortgage rates skyrocketed almost 50 basis points, 0.5% from where it bottomed on Fed meeting day. To give you an idea of how big 0.5% increase in mortgage rates is, if you had a $400,000 loan, which is essentially buying the median priced house in Nashville and putting 20% down. If you put 20% down, your monthly payment increased by about $150 a month just in the last 3 weeks since the Fed cut rates. That is wild. That is wild. Now, if there was a mistake and the economy's fine, which everybody's like, the economy's fine, I'm not going to say it's political, but for every Republican economist in the Federal Reserve, there are 10 Democrats. It feels right now in hindsight like it was political. Now, maybe I'm wrong. But that's the jaded side of me. Nonetheless, Stanley Druckenmiller says he is shorting long-dated bonds. He did say he didn't know whether the bond trade would take 6 months or 6 years to play out, but he is confident that over the long run, interest rates will go up. The fact is that you cannot bank on mortgage rates going down. I just fundamentally believe that when you buy a house, you should be buying it based on the current mortgage rates and your affordability. And if you can't afford the house with the current mortgage rates, don't bank on rates dropping. This is why the 3-2-1 buy downs are just so dangerous, which, by the way, guys, we're now in the second year, really going into the third year of these 2-1 buy downs. People who did it thinking that they could refinance have had very limited windows to refinance in if they've had an opportunity at all to refinance. By the way, I posted this on Twitter. It's got, let's see where it's at now. I'm going to refresh it here. Almost 19,000 views. That's kind of cool. Anyways, I just posted this on Twitter. It's the Airbnb active listings, non-owner occupied active listings in Nashville. I mean, these are basically like commercial properties in a sense, but they're in residential spaces and they're taking up, 147 right now. It's 10x'd from where it was in January of 2022. It has 10x'd, and now we see that demand really hasn't changed. This red line is demand, really hasn't changed all that much. Pretty wild to see that Airbnb's skyrocketing. Now, to give you an idea, someone's like, well, there's only 147 of them. Okay, but this is 147 non-owner occupied Airbnbs. These are empty units being used as hotel rooms that are now converting back, or maybe they stay non-owner occupied. I don't know. but the people that own them are exiting a lot more. Now, how did I get this data? I just searched non-owner occupied in the description. In the daily plots, how I do all these. So this is 4 to 5% of the active listings in Davidson County. So think 1 in 20 listings or 1 in 25 listings are non-owner occupied Airbnbs. Pretty fascinating. Active listings continuing to go up. Notice this big drop right here that happens at the end of every single month, but we're at 7537 for active listings. I expect in October for them to continue to go up, which means, guys, this is the absolute best time of the season to buy. Why is it the best time? You have the most active listings available. Okay. I expect it to go up for the rest of the month, which, by the way, if we hit 8,000 active listings for Middle Tennessee, that will be nuts. We're already at a pre-COVID high right here. Okay. We've exceeded our high now, but if we hit 8,000 active listings, that'll just be wild. I think we might, it's a long shot, but I think we might be able to do it in October. I would love to see active listings hit 8,000. That would be amazing. But guys, when we talk about seasonality, you've got the most listings of the year coming online before they start falling in November. Look at contracts. Your contract volume is 30% lower than where it was in May. It peaked in May around 2,800 contracts. Now we're at 2,287. It's about a 30% drop. So you have peak listings and your demand is 30% less. That gives you a much better opportunity to find the house you want and buy it with much less competition and much more supply, many more options on the market. This is, if you're planning to buy, not trying to get anybody to buy, but if you're planning to buy, this is a perfect window of opportunity. You really have about 4 to 6 weeks from today to really take advantage of the best time of the year to buy, because there's just less demand, more supply. It's really just that simple. There's no like magic to it. I'm just looking at 2 charts and I'm saying, hey, so, okay, let's keep going. Let's look at price. So by the way, price dropped. Look at this. Oh, this is crazy. Okay. So 467 is right. 2,200 closings, 467 is where we'll be for single family homes for the greater Nashville realtors, give or take 1,000. That's kind of important this month, because when we look at last year's number, 468, 410, it looks like we are year over year negative for the first time this year. Absolutely stunning to see just this dramatic fall. I mean, we were well above 500,000 in the peak of the season. Now, not at the end of the month, but at the peak of the season, we were well above 500,000. I think the peak this year recorded was 50. Oh, this is last year. Let me change this to 2024. It was 505. I think it was in June of this year. It kind of bounced between 500 and 505 for, oh man, my head's in 2025. Can you believe that? Yeah, look at that. 505 in April, 499 in May, 505 in June. And then it started to drop, 499 in July, 485, dramatic 3% drop. And then now we're at 467. That's another 3% drop, right? 15, 20. I mean, that's, almost 20,000. That's easily a 3.5% drop. 2 months in a row of almost a 3.5% drop. Crazy enough, you can see it in this chart right here. Now, what's crazy, this blue line that I have here, this blue line is actually pushed out 90 days. Okay. It's pushed out more than 2 months. I don't know exactly the number of days, but it's pushed out more than 2 months. You can see it right here. 1, 2, 3, and now we're in our, so it's like 90 days. Look at how it correlates to the price trend. This is wild. It showed the price skyrocketing 90 days in advance. Okay, what is this blue line? It's price cuts as a percentage of active listings. Price cuts as a percentage of active listings very accurately predict the trend of where prices are going. Now, you can see, and I know I'm confusing because I talk about prices drop, prices go negative, and then the next thing you know, I'm talking about prices going up in the same sentence. Well, part of it is because I'm talking about these 3 lines. Sometimes I'm talking about contract and I'm saying prices are going up. Why? Because the median contract price, this red line, is going up, even while the green line, what's actually coming in, is going down. And I know this is confusing, and I'm confusing when I say it, so I hate that. But the fact is that I'm talking about one of these 3 lines, at any given time. And so I'm saying prices are stabilizing and going up. Why? Because I can see contract prices going up and I can see price cuts as a percentage of active listings is stabilizing. Now, you see this blue line has jumped up. It always jumps up at the beginning of the month. It will normalize, but this is also a part of all those canceled expired listings going off and coming back on. The other thing that's weird though, and I haven't figured this out, look at where contract price is. This is dramatically different from where our prices are closing. This is why I believe over the next 2 months, even though we went year over year negative, we're probably going to bump back up pretty significantly. If we're at 467 today, we could easily be in the 480s by the end of November, and certainly maybe even the end of October. So I'm predicting the prices bounce pretty hard, potentially back up into the 480s, and it's not magic, guys. Everything under contract right now is closing out in October. Okay, there's no new listings that are going to go under contract and close in October. There'll be very, very few that actually do that. So my point in saying that is October prices have already been locked in. It's just a matter of closing those out. And since we know what's under contract right now, it is much easier to predict that we'll be somewhere close to this number minus whatever the seller gave in concessions off of the list price. So I predict if you take the $499 where it is towards the end here, I predict that we will be somewhere in the 480, 485, right? 10 to 15,000. If the median contract price is $499, take 15 off of it, it's 485. That's probably where you're going to be, somewhere around in there. And it's not going to be exact, but you'll probably be around 485. So we could be at 485 by the end of October, but wow, boy, oh boy, did we get a massive, massive drop and even went year over year negative. Something I just couldn't imagine happening just 60 days ago. It was really wild. Okay, so let's look at schools. All right, so here's all counties, here's all the schools and the median price for all the schools. Let me move my guy out of the way. Median price for all the schools, and you can see, what do we have? We have the number one most expensive school here. Let's just chop it off right here. If you are in Williamson County in Ravenwood High School, the median sales price is $1.45 million in Ravenwood. Brentwood's 1.4, and Fred Page 1.1. Hillsborough Comp High, this is Davidson County, $1 million. That's Green Hills area. And then Nolensville, $950. Pretty wild to see that. Now, if you zoom in, let's look at Wilson, by the way. A lot of you have been asking for more information on Wilson. The most expensive high school district in Wilson is Mount Juliet High. I don't think that's a surprise to anybody, but we've got Wilson Central 505, Green Hill, and then we've got Mount Juliet High 550. So anyways, kind of interesting. But let's zoom into Williamson real quick. Williamson, Ravenwood High, 1.45, Brentwood, 1.4. Now, one interesting thing about this is I actually have the years up here, and I went back to 22. And if you take 22, Ravenwood High has not changed. The median price has not changed in that school district at all. But look at Brentwood High. It went from 1.2 in 2022 to 1.4 in 2024. Pretty wild that it jumped that much, but let's take a look at some of the listings. So what I did was I actually searched for active listings, houses, not condos, but active listings in the Ravenwood High School District. Here they all are. Look at this, $10 million, $7 million, $9 million, $5 million. If you want to spend $5 to $10 million on a house, pick Ravenwood High School. It's crazy, the number, but you can also what is the cheapest house? Look at this guy right here. Bateman Avenue, which, by the way, guys, I love this neighborhood. The location of this neighborhood and the access to 65, you could be at Costco in like 5 minutes, but this neighborhood, especially on the north side of it's wooded, it's a beautiful neighborhood. I love this neighborhood, but look at this, $675 for a 3-bed, 2-bath. You got a garage, got a railing. These things always give me anxiety though. Look at that railing right there. I don't know, it looks like an accident waiting to happen. $675, Heart of Cool Springs, new HVAC, Windows 2022, and you can be in the Ravenwood High School District. Not many in the 600s. In fact, there's 1, 2, 3, 4 before you get to 900. I mean, golly, this district is so expensive. It's so expensive. A 1.5 million, the median, and you can see why. It's just wild. By the way, look at this one right here. Sapphire Court. This one is actually assumable. You can assume it 2.375 with list price. She's being pretty firm on price. I've really pushed this one, but there's one thing about this house that's pretty interesting. There's actually a graveyard in the front yard, not owned by the house itself. The HOA or the city maintains. I think it's the city that maintains it, but 2.375 mortgage. Would you do it with the graveyard cemetery in the front yard? I don't know. I would. I personally would. I personally would. I'm just saying. Would you? I don't know. Tell me in the comments. Would you? I don't know. And with that, I hope you guys have a great weekend, and I look forward to seeing you next Saturday. Please hit that like button if you enjoyed this video.